right. First, I want everyone to notice that I'm wearing my old Heritage Foundation tie. David Burton said this was the only way I was allowed in the building, but I did wear a sweater to cover most of it in case anyone at Cato notices.
Sweater vests are very in at the Cato Institute these days.
I want to start by saying this is not an economics debate, because if you heard what Doug and Steve have already said and what you'll hear from the other speakers, we all basically believe in the same thing. First of all, we believe in smaller government. If you have a giant European-sized welfare state, there's no such thing as a good tax system. So we all want smaller government. But then when you're looking at how do you finance that government, we all want the lowest possible rate. We all want to get rid of double taxation, and we all want to get rid of distorting and corrupt loopholes and preferences. And that's sometimes called the consumed income tax or consumption-based tax, but you know what those terms simply mean? It simply means a tax system where income is only taxed one time. That's what a consumed income tax is. Because over your life, your consumption and your income theoretically are going to be equal to each other. So we all know where we want to go conceptually. We're simply having a debate and a friendly fight over, okay, what's the best way of getting there? What are the pros and cons of the different options? And I'm not a fan of a business transfer tax, business activity tax, subtraction method. I don't care whether you call it a pencil, a table, a polka dot, whatever you call it. I'm a little worried about it unless you're getting rid of all other taxes. Because a value-added tax or business transfer tax or whatever you want to call it, as has already been pointed out, is conceptually a very good tax. Actually, it's not a very good tax. It's a relatively non-destructive tax, because no tax is good for the economy. We're simply trying to decide how can we extract revenue, hopefully not too much of it, how can we extract it while doing the least amount of damage to the economy. And a VAT gives you exactly what you would get with a Hall-Rabushka flat tax. It gives you exactly what you would get with the old fair tax. It gives you exactly what you would get with Steve Benton's inflow-outflow tax. These are all low-rate, neutral, tax income only one-time plans. But here's my problem with whatever you want to call this plan that we're talking about today, with a subtraction method VAT. I trust the politicians who are talking about it today in the presidential race. See? I'm not sure I trust the politicians who might follow them to the Oval Office. When I go to sleep and I have my nightmares involve President Chelsea Clinton in the year 2028 or something like that. And if she comes to office and we have the structure of something like an income tax, along with now the structure of a value-added tax or polka dot tax or whatever you want to call it, my concern is that we might follow the Europeans. Because keep in mind that already baked into the cake, because of our demographics and because of some very poorly designed entitlement programs, the burden of government spending, if left on autopilot, is going to skyrocket over the next several decades as the baby boom generation moves into full retirement. We have a choice. We either figure out how to reform those entitlements and sort of bend down that cost curve of government spending, what I call my golden rule, have the private sector grow faster than the government, or we can give the government a new tax that they will use in the same way the Europeans used it to, in effect, accommodate that giant expansion and the burden of government spending. So I have no objection theoretically to what some of the proponents of the business transfer tax subtraction method VAT are trying to do. I do have a big concern that they're not going to be in office forever, and there are people in this town who are salivating. They are dreaming, they are fantasizing, they would give their left arm to get a new tax to add on top of the income tax. And of course, I suppose I should add to that, okay, maybe if you get rid of the corporate income tax, and maybe if you get rid of the payroll tax, maybe that somehow compensates them. But what worries me is that the plan as introduced now is as good as it's going to get. By the time you go through the legislative sausage-making machine of Congress, well, maybe we only bring the payroll tax down to 3%, so it's still there. And anyone who's ever gardened, if you cut a weed off at the base, guess what? It grows back up again. And maybe we'll cut the corporate tax rate down to 10%, but if the corporate tax is still there, in other words, I'm just worried about the downside risk. If you go with the Hall-Rabushka flat tax, you know what the worst thing that happens is? And I'll close on this. The worst thing that happens is you degenerate back to the current system. If you adopt a VAT without fully getting rid of even the semblance, even the hint, even the scent of an income tax, the worst thing that happens is you become France, which of course is a very good segue to our next speaker. Thank you.